hours away from the so-called fiscal cliff. What will markets do on the morning of the 2nd, should there be no deal?
I think even if there is a last-minute deal, I think it's going to be a sell-off and a negative start to 2013. We've had such a positive December, barring the last couple of days, that the markets will pull back if any deal is done. I think there will be compromises, but I think we will go over the fiscal cliff and wake up to a new world in 2013.
And how do European markets fit into this? I mean, will they perform or underperform more or less than US markets?
Yeah, I think the main European markets are going to get hit quite hard, so I expect the DAX, which is closed today, to have a big negative start come the 2nd, and also the UK market to fall fairly significantly. The sort of Spanish and Italian markets have their own problems, are going to play out more to those themes rather than the US fiscal cliff.
Of course, the DAX is up some 30% this year, so I suppose you could say the higher they are, the more they've got to fall.
Yeah, exactly. I mean, the DAX has had a fantastic run. It was off a fairly low base, but Germany is exporting well, but I think it is going to get dragged into a Eurozone bailout and some formal intervention with Spain and Italy, which will be quite costly to the Germans and possibly the French.
Okay, as I said at the top of the show there, I went over the 3 best performing asset classes of 2012. What do you think are the 3 best buys for 2013?
So I think gold's a particularly interesting one. It's come off a reasonable amount in the last couple of weeks. I think it's a safe play if we go into a sort of world meltdown with a US recession which triggers Eurozone bailouts. It's a good safe haven. But if we do get some glimmer of growth and an economic recovery, we're going to have a lot of inflation with all the Fed and central bank money in the system, so we'll be an inflationary play. So I think it's a good all-round hedge at the moment. And then coming on to the Eurozone, I think the spread between Germany and the southern European markets is going to close. Germany is going to have to pick up the tab for a bailout at some point, and Spain and Italy's yields are kind of underpinned by the ECB at 6%. So it's a good buy to close that spread.